And this session will be explaining, we have some of the top venture capital firms here in Silicon Valley that invest in Korea as well as in US and global opportunities. And they will be discussing why the Korean market is attractive in itself to invest in. The panel will be moderated by Perry, and he'll introduce the other speakers.
Good morning. Pleased to be moderating the Silicon Valley VC Investing in Korea panel. Our entrance wasn't as smooth, but our panel, I think, will be fantastic because I've known these gentlemen for a long time. We're one of the few Korean American investors based in Silicon Valley investing in Korea. So we have a lot of interesting investments and lessons learned from that. So I expect the panel to be quite interesting. My name is Perry Ha, Managing Director at DFJ Athena. As you might have heard from Tim Draper early in the morning that DFJ Athena is a member fund of DFJ Network focused on Korea. So it is a US Delaware-based fund, but we have offices in the US and in Seoul investing in Korea. I'll be interjecting as an investor here and there, but I'll be asking the questions mostly to the distinguished panelists here. What I'd like to do is I have a set of about 10 questions, and we can certainly open up to the audience for the questions you may have. What I'd like to do is start with the panelists introducing themselves for about 2 minutes. So if that's okay, Han, you might want to start introducing yourself, and then we'll go to Tae-hee, then Eric, that order.
Sure. I'm Han Kim from Altos Ventures. It's a Silicon Valley-based firm. We had been dedicating about 10 to 15% of our fund investing in Korea-based companies, and we have about 10 Korea-based investments to date. Our first investment was in 2006, and we actually liked our experience so much that we've recently dedicated about $50 million fund to be started just for Korea-based companies. So that effort just started. So that's how much we like Korea-based companies. And we only invest in mobile internet-based services and software companies.
Hi, I'm Tae-hee Nahm. I'm one of the partners at Storm Ventures, and I focus on investing in mobile and SaaS companies, whether they're here in United States or also in Korea. And have found that investing in Korea to be very, very good for us and for our LPs as well.
Hi, I'm Eric Kim with Maverick Capital. We're celebrating our 20th year in business, and hopefully we'll have many more. We're a global firm. We have offices in San Francisco, New York, London, Hong Kong, hopefully Korea someday. We've done a few investments in Korea, but our history with investing in Korea, in particular the internet, goes back to investing in a lot of the public companies, such as NHN, Nahm, NCSoft, NeoWiz. And then over the years, in particular, we've gone earlier and earlier, and now do Series A, Series B investments in Korea as well. So.
Thank you. As you can hear from their backgrounds, they are based here, so they understand the Silicon Valley culture and the investment. And on top of that, they've been investing in Korea, so there's definitely a comparison. So let me start with the most insightful question. So what do you like about investing in Korea? Be a little more specific. Don't say, hey, we made money, therefore we like Korea. So maybe perhaps one of you, all of you can pick one thing that you think is interesting that you like about investing in Korea.
I guess I'll start. For me, I like investing in Korea because for two things. First of all, I find that Korean founders are extremely passionate and driven, and that's an important ingredient for success, whether it's a Silicon Valley startup or a Korean startup or anywhere, in fact. And then the second is that since mobile is an area that I really focus on, and Korea is so strong in mobile with Samsung, LG, KT, SKT, find that many of the the business model, services, or technologies in mobile coming out of Korea are actually in advance of the United States.
I'm sure a lot of folks have heard these statistics before, but it's great infrastructure, 95% internet penetration, if not higher. Great end market, right? $30 billion e-commerce market growing at double digits per year. Fantastic talent, one of the greatest education systems in the world. And the fourth thing that we've been realizing more recently is that it's a great gateway to the rest of Asia and Southeast Asia. If you think about Korea as a market itself, it's a huge market, and I think it deserves investment in and of itself. But it also has served for us as a gateway to other markets, in particular Southeast Asia, China, Japan as well. So for us, we're really excited for those reasons.
I think those are all the reasons, and as an investor, one thing we like is actually there isn't that much competition among various VCs from here wanting to travel to Korea to find some good companies.
I thought that was our secret.
Now the secret's out. Let me just add on one more thing. That is, Han talked about the competition with other VCs. Tae-hee talked about the good team members working very hard. The cost of building a company is far lower for those reasons, and then there isn't this easy departure from one company to another. So there's the team loyalty built into the equation, which is a big deal. As you may know, in the Silicon Valley today, it's quite a hard market. It's very hard to attract good talent at a reasonable price. A lot of us have been in the business for a long time. We remember the bubble days in the year 2000 or slightly before, where some engineers who otherwise won't be hired because they're not good enough were getting multiple offers. I know all of you here are not that case, but the supply and demand of both labor and capital plays a big, big factor in whether you can build a good company or not. So now, so you talked about the good things, but let's open up the hood and say, I really don't like about this, investing in Korea. So what are they? Let's start with Eric.
So I think one thing that I find a little bit frustrating more recently is the notion of what entrepreneurship means. When I'm here in Silicon Valley, so we're one of the partners for Y Combinator, where we invest in all their startups as part of the YC fund, and we spend time with their startups over their 3-month incubation period. It's very clear for each of those companies, for most of them at least, that the why is very important. Like, why do we exist? And this is extreme passion of theirs, and it's very clear why they're in the business of being an entrepreneur today. What I hope will eventually happen in Korea too is that the why becomes very clear for entrepreneurs. It's not just a very romantic thing to become an entrepreneur. It's a very tough thing. But I find that recently it's just a very romantic notion to become an entrepreneur. And that, for me, is a little bit frustrating because I meet very talented people, very young, great, talented folks who are missing that piece, that why. And so, that's been a little bit frustrating for me.
Han? Oh, Tae-hee, go ahead.
For me, I see the main challenge of investing in Korea, and the reason why it's hard for me to, let's say, invest 20 times more in Korea right now is it has to do with exits. Is that in Korea, when companies go public on Kosdaq, what we're seeing on average is companies going out at $40 to $80 million market cap. And so let's say as a VC, you own 10% of the company. That means, the proceeds to you are $4 to $8 million. Whereas here, I've got a company that just went public this year, you can go out at a market cap of over $1 billion. And so for the same ownership, you get significantly better returns here in the United States. And so I was thinking about it, and then the question is, why is the Kosdaq exit much lower than the NASDAQ exit? And I think it has to do with the potential market size that the companies are facing. So a typical Korean startup, and there are exceptions in games and e-commerce, but without those areas in general, by just serving the Korean market is a relatively smaller opportunity, and therefore you have a smaller exit. And so that's the challenge that I see is sort of investing in is sort of, you know, you get dollar in, but you also want to get a fairly good dollar out.
Han?
I guess my difficulty is somewhat related to Tae's comment, although I do have a slightly different opinion on the market size. I think a lot of times in Korea what I find is that there is maybe it's because of the exit environment, a lot of people are really pressing, investors and the founders as well, pressing for a certain amount of profits when they get to about a $10 million level. And 10 million, 20 million, you get $3-4 million of profit, and you're ready to go public because, you know, going to IPO is a big event, and when you go public around that time, the typical IPO market valuation is around 40 to 60 million, and you go out and you don't really invest in sort of the next opportunity, and you're somewhat happy with making more profits. And a lot of times I see companies venture into completely unrelated areas with the profits. And I do think that's one of the reasons why market cap of a lot of these companies don't move up. And you know, so the challenge for us typically is when the companies start producing profits and they're, you know, getting to a $10-20 million range is really convincing the entrepreneur, hey, this isn't it. I mean, you are just barely getting started. Let's figure out a way to build a $100 million business, whether it's domestic, going overseas, whatever it is. Let's figure out a plan. Let's not be in such a huge hurry to go public. Let's build a real company that, you know, could be valued at much, much higher. And those it takes some convincing before they get up there.
Let me just add one piece to what these gentlemen have said. Maybe this is both good and bad. The biggest culture that I noticed through investment in Korea is that Koreans always talk about the word owner. Who's the owner of Samsung, or who's the owner of SK, KT. The same kind of concept applies all the way through some of the startups as well, we've noticed. So we, in the US, investors look at the CEOs as professional managers. If they work out, that's great. If not, we may have to bring a new CEO. In Korea, it doesn't quite work that way, because if your owner goes, then the company goes. And that's the not only view of that particular entrepreneur, but also the people around them, or the owner's gone, so therefore the company's in shambles. So I think once you understand that, you can kind of figure out how to invest in the first place. And then, second of all, when some things go wrong, you can also take that into consideration and manage in a way that's actually beneficial to you as well, in which we had a couple of those interesting cases. But now, let me go to the next question. As you can see from people here, and the pitches from Korean companies from Korea, a lot of Korean entrepreneurs want to come to the US. So how, maybe you talked about it a little bit, but how do you view the success factors for the Korean entrepreneurs from Korea trying to enter the US market, bigger market? Somebody want to start with that one?
Well, I mean, to track back a little bit, I think a lot of the Korean companies lack, I'm generalizing it, but lack your typical marketing skills. And I think it's because in Korea, you just haven't had much opportunity to practice marketing skills. And so if you think about sort of how the population really is segmented in the US, it's very dispersed. So, and in Korea, it's a homogeneous society where you got like half of the population in basically top 25 cities. So about 25 million people of Korea live in top 25 cities in Korea, compared to same 25 million people living in top 25 cities in the US. And the density level difference is about 16x. So you got hundreds of millions of people now dispersed in the US. In Korea, because of that density, when certain service comes out and it's somewhat unique, it just takes off through word of mouth. And I think that's the kind of thing that a lot of the Korean companies are used to, so they rely on PR, etc. And they come to the US, and US it's not a homogeneous society, and the population is dispersed over a big geographic areas. Now you have to figure out how to segment that audience and what's the cheapest way to reach that audience. And it takes a lot of trial and error in terms of getting to your customers, whether it's the consumer deals or business deals. And it just, a lot of times, you just haven't had that kind of practice. So unless you figure out a way that you could compete effectively in sort of the different settings, I think it's hard. And so it's not impossible, but you have to be able to compete on sort of on the marketing and sales before you could come out and have a decent chance of success.
Tae-hee, perhaps you can talk about your experience. One of your portfolio companies obviously have done very well entering U.S.
Sure.
Perhaps you can put that into the context and describe.
Yes. Yes. So I think what Han said is absolutely true, which is, just going to market in the United States is very hard, whether you're a new Korean startup or a new Silicon Valley startup. I mean, it's just, frankly, it's very hard, and that's what separates companies that succeed from those that fail, from my perspective. And so, been working with, as Perry said, with the Korean startups that we invest in and sort of get to know. And one company invested in about 8 years ago was Come2Us, and I've been on the board of Come2Us. And when we first invested, it's a mobile game company. Revenues in the United States was about 0. And then they sent one person to the United States, and he ended up moving from LA to our office, spent a lot of time with him. And over the years, US now is, I think, 30% of the company's revenue, so it went from 0 to about 30%, and the US office is up to, I think now about 10 people, maybe 8 or 9. And so, and then there are other Korean companies been working with trying to, replicate the US go-to-market. So I think based on that experience, I think a couple of things, advice I have is, number one is, it only works if the CEO is personally committed to making this successful. That's the first thing I would say, is that if the CEO doesn't have that level of commitment, and a good test of the commitment is that the person's willing to come to the United States at least once a quarter, I think it's just going to be tough. If you want to delegate and all that, it's a hard thing to, otherwise, unless you have that kind of personal commitment from the CEO side. And then the second is that the go-to-market, well, I find whether it's even a US companies or Korean companies, that the go-to-market strategy has to fit the DNA of the company and the culture of the company rather than following a generic model. Because you just can't take someone else's strategy and say that's yours, because every person is different. But once that happens, it can work out very well.
In the interest of time, I may go to the next question. Eric, I'll start with you. Talk about the difference in investment terms between what we're used to here in the US and in Korea, and how do you deal with some of the fundamental differences?
I remember a term sheet that we negotiated a few years ago, where it was getting so complicated, and the lawyers in the US and Korea were having such difficulties reconciling typical US terms, particularly around liquidation preferences and what that meant. Most things, that term really doesn't exist in Korea. So I had to basically get everyone in the room, the US lawyers, the Korean lawyers, myself, and then the management of the company, to walk people through what this meant. So it was a very long process to basically make everyone understand why we would potentially put that kind of term in. So there are, I've noticed it's gotten better though in the past few years, but there are some key differences, and this goes back to your owner statement earlier, Perry, I think, where you know, if a CEO of a company owns a huge amount of the equity, they may not appreciate some of the terms that investors may want to put in quite yet.
So Han, what did you, how do you work with the conflict in the liquidation preference terms that's, well, liquidation preference terms that's in conflict with Korean trade laws? Or do you just let it go and say, all right, 1x, that's it?
No, we even in the U.S., we don't go more than 1x liquidation preference. For those of you who may not know what liquidation preference means, it's basically, let's say, VCs like us, let's say we invest $3 million into the company and we take 10%. But the company gets sold for $5 million. That doesn't mean a 500K comes to the VCs. It means that 3 million plus, you know, whatever annual dividend rate that you put on comes to the VCs before, you know, whatever whatever million gets shared among the rest of the common shareholders, including the management team. And a lot of the, I think in Korea, that kind of practice is not something that's widely understood. So what we do is, during the process, I actually got to know about this conflict more recently, but what we do is we make sure this is all spelled out, and before any of the common shareholders actually make any money, we make sure that I think the way it gets done is the money actually has to transfer over to the preferred investors before the common gets any proceeds. And on top of that, that includes all the individual investors that may have invested in the company before as well. So that's sort of the agreement that we put in place.
Anything specific, Tae-hee? Specific terms? What about the options? In Korea, you're not allowed to give options to the founding team or the owner.
Yeah, we just went through this, not with respect to the founder or owner, but just a few months ago, where for a company, you know, we want to go to the market in the United States, and so we had two people we really wanted to recruit. One is a retired, very senior executive at one of the major U.S. carriers, and the other is a vice president coming out of another major U.S. company, and giving them standard Silicon Valley options was not something that we could do. Like, for example, you couldn't exercise them for 2 years, and there are all these other requirements under Korean law which made it unattractive in terms of recruiting top U.S. talent.
Yeah. I'd add just one general statement about the differences between Korean law and U.S. law. And I'm not a lawyer, so I'm not a particular expert, but based on my experience, when I see certain Korean term sheets, things are not really specific sometimes. And then when in a U.S. term sheet, it can be very specific. It can be like 10 pages long. And if we bring that to a Korean entrepreneur, they'll be like, well, why? There'll be some suspicion of distrust. Why are there so many specific terms? And they'll push back a lot. And in the US, we're very used to things going to court or things going wrong or going to arbitration. And so the reason for the specificity is so that in those bad outcomes, we have clarity about what will happen. But when you bring those terms over to Korea, it's perceived as you're being suspicious. Why are you trying to put all these specific terms in? Can't you just trust me? Blah, 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 blah. But from our perspective, it's so that we don't have huge problems down the road if something bad were to go on, so that there's clarity. You know, we value clarity so much. So I think that's been just a general meta observation that I've had in dealing between the two.
I guess that's why Koreans go drink, to resolve these conflicts.
Right, go drink, yeah, exactly.
What about the government's involvement or the support into entrepreneurship and startups, even some of the VC or taking position in the VC funds as an LP? For example, even today's conference, I think, is in part supported by the Korean government, especially with the new administration who really want to support entrepreneurship, et cetera, et cetera. So there are a lot of grants and a lot of programs that the Korean startups can go pitch for and get the grants. How do those things work? How do they think? Do they actually help or do they actually hurt? Is that a more distraction? What have been your experiences? Anybody want to take it?
You know, the way I think about it, I think it's net positive. I don't know if it's going to make a huge difference. I do think if whoever is behind whatever the government program it is, if it's a government person, if he or she actually takes responsibility for it, for whatever the results may be, then I think it could be very attractive. If that person is doing that so that he or she gets promoted and then the person moves on after a year or two and don't take responsibility for it, then I think it's probably not going to have a good outcome.
I think it's actually fantastic in sort of getting the entrepreneurship system geared up in Korea. I mean, to make entrepreneurship sort of a cool thing, you know, socially acceptable, provide initial funding, and a lot of other support. And I think the challenge, though, is how to make it so that it's repeatable and sustainable without Korean government support or any government support. Because you know, I think Korea did the same thing in sometime in the 90s, and you had this sort of surge, and it turned out not to be sustainable. But so that would be my thought, is whether it's in Korea or any place, that government is a good way of starting, but it has to be sustainable without the government support forever.
I believe we have about 5 minutes left. What I'd like to do is perhaps now turn the table around and say, there are a lot of Koreans in Korea try to build a business and try to enter the U.S. But there are also a lot of Korean Americans in the U.S. Because of the heritage network, whatnot, want to do something connected to Korea as well. So from your experience, I'm sure you see a lot of Korean Americans who come through your doors pitching the story, and I'm doing this, this, and this. What are the opportunities, and what would be your advice to each one of those? So all three of you could take maybe a 1 minute shot each, and then or perhaps we might have to close. Okay, let's start with Eric.
So as a Korean American, I'm a full supporter of Korean Americans trying to go back to Korea and be part of the ecosystem. My first job out of college was actually going to Korea to work at a startup. And you know, my language skills were not that great. When going there, I learned a lot, both language and how to do business there. But I just felt this personal passion to go over and get in touch with your roots and be part of the ecosystem. And that was a while ago. And now you fast forward to 2013 today, there are so many more opportunities to do that. So for Korean Americans, I think it's a great opportunity to go do that. Also, it's as much about bringing what you may have learned here, some best practices. Not everything's going to fit, but taking that over, going to Korea, being able to potentially contribute in a little different way, both your language skills and porting over some of the best practices from over here. So I highly encourage it. I highly encourage it.
Yeah, like Eric, I think, you know, it's a phenomenal opportunity, especially with the rise of Korea, whether it's in IT or K-pop or content, whatever. And my suggestion to Korean Americans is, from a career standpoint, is to pick a sector where both Korea and the United States are strong in. So then you can then have the advantage of a network and skills in both sides that will advance your career wherever you may be, because you may be going back and forth.
Yeah, I mean, same here. I would absolutely encourage it. You know, when you think about it, Korea is a place where you could quickly gain traction. You know, I talked about sort of the lack of, you know, the marketing expertise in Korea. However, Korea is one of those countries where you could gain millions of users very quickly with the right product and the right service. And it's probably the cheapest customer acquisition in terms of, you know, when you really count the user acquisition cost numbers. And it's a place where you could get to a 1 to 2 million very quickly and expand from there. And if you could take some of the expertise that you learned from here and go, it's a fantastic opportunity. We've had, one of the companies Eric and I are involved in, Coupang, is a Korean American, went over there with 0 ties to Korea. It's grown to be a fantastic company. And I'm sure there will be many more opportunities like that.
That's great. Let's see, one last parting thought as a moderator and then perhaps also as an investor would be related to their concept. I think there's a lot of opportunities for being Korean American and be able to leverage the heritage plus all the rise of IT economy in Korea so that you can take those into consideration and hopefully build a good company by becoming an entrepreneur. That said, I think we're all living in the Silicon Valley, which is actually a huge bubble. So I think having the word passion is overstated, overemphasized, and oftentimes understanding oneself is quite important as well. So not everyone's going to start a company, become Mark Zuckerberg in 5 years or 2 years. So I think building fundamental business skills, technical skills, marketing skills, and gaining the experience before jumping in, I think would be very important. Make sure balance those two as opposed to being caught up by this blind passion. Passion is absolutely needed, but I think you also have to put in hard work and get the experience and build it up. So it will be my last thought. Anyway, please give a big round of applause for these fantastic panelists. Thank you very much.